QuickBooks Pro Desktop 2021. Fixed asset items, purchase of office equipment. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our fixed asset practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. Last time we set up our chart of accounts for the fixed assets by going to the lists dropdown, taking a look at the chart of accounts. We adjusted our chart of accounts to these categories, which are going to basically line up to what we expect to be seen on the depreciation schedules, which we're going to be doing on the tax software working with our CPA firm. Now, we want to say what happens if we purchase office equipment. How are we going to record it? Not only to put it on the financial transaction, to record it to the financial statements, but also to put it into the lists that we're going to have. So we're going to use the item list by going to the lists drop down and then take a look at our fixed asset item lists. So let's say we're going to make a purchase. Let's say that we're making a purchase of office equipment from like an Office Depot or something like that. And we're purchasing multiple different things, but they're going to be large items such as computer equipment and shredders and stuff like that we are then recording. If we're just paying cash for those large items, then what would typically happen is if we go on over to the homepage, and if we're just paying cash for it and not financing it, then we can basically do a normal type of transaction, even though we're doing something that isn't done every day, meaning the purchase of property, plants, and equipment is not an activity that happens all the time. Therefore, none of these forms are really lined up specifically for the purchase of equipment. If we were to finance the entire equipment, we would have to do it, basically with a journal entry or possibly registers or something like that. But obviously, if we just pay cash for it, we can use, in essence, a check type form or the register to record it. So I'm going to say, okay, we're going to go to the register. It's going to be an easy thing to record, just like anything else we pay for, right? It's going to come out of the checking account. There's nothing currently in the checking account, but we're going to imagine we have money. And that's going to be on 115. We're going to put this in, and let's say we pay Office Depot. So Office Depot, the supply chain, we're going to set up that vendor. We're just simply going to pay them whatever it costs. We're going to say it costs $6,700 that we're going to be purchasing. And then the other side, notice down here you have the expenses, and then you have the items tab. Now this is where things get a little bit different, a little bit tricky. The expenses tab doesn't really mean expenses. Expenses just mean that you're going to hit some type of account. You could hit the account here instead of an expense account, the fixed asset account, which would be simply the machinery and equipment. But if you were to do so, you would record it basically as one lump sum. And we want to make sure that we're kind of breaking it out into the actual things that we purchased so that we can then give that information to the tax preparer to break it out by the actual items. So you might say, hey, I can group this whole thing into just simply one item like machinery and equipment. But if we bought multiple things, multiple computers and whatnot, we would like to break it out, mainly because when we sell the items or dispose of them, we want to know which ones that we sold. We also want to be able to track the items we have, and it would be better to do that if we have each of them broken out. So right now, usually we don't want to do it on the expenses side possibly now. We might want to go to the item side. Now the item side basically means that you're tracking something other than just an expense account. Usually inventory items, if you're tracking inventories when we purchase something. Now we can use the same kind of functionality to track the fixed assets. So I can then go over to the items side, and then instead of just putting the one lump sum item in there, I might create one item and say, hey, look, I purchased office equipment, or I purchased 5 computers. I might just say I've purchased 5 computers and that's it. But if I just list that as one line item, what will happen is it'll show up on our fixed asset list, meaning lists drop down, and then we go to the fixed asset list here. It'll show up as one line item of like, we might put a description like 5 computers and 2 shredders or something like that. And then what the problem is that when I sell it, if I sell it at some future point in time, I'm not going to know which one I sold, and they'll also be tied into that accumulated depreciation that we'll have to deal with it. And so if I try to break that up in the future when I sell it or dispose of it, it's going to be a problem. So what I want to do is list them out one by one. I also want to be able to provide that list to the tax preparer so they can provide depreciation schedules line by line, not just one grouped sum limit. So that's what this list is going to kind of force us or help to force us to do. So we're then going to say that we could set up the items then in the list over here. I'm going back to the lists. We could set them one by one up in the list and then apply the accounts to them, or we could set the items up as we go on this side. So let's do one at a time. Let's say that we purchased 5 computers that cost $650 as part of this purchase. So we got 5 computers that we purchased. So what we want to do is I could go to the list here, into the fixed asset lists, and say I want a new item, and I'm going to call this a computer, and I might like name it. I might say it's a Dell computer or something like that. And then we're going to say, did we buy it used or new? This is important because when you go to the depreciation schedules for the tax software, then if it's new, you might be able, that might help you to qualify for like 179 or special depreciation deductions. So you want to be able to mark off, is it new or used? Then you want the full description. So you might want put computer, Dell, and then you might want to, whatever other description you can have on it. The actual specs of the computer would be good. The date purchase 01, I think 15/21 we decided on. The amount is going to be the 6,500. Now, again, we paid more for that. I'm sorry, the amount is going to be 6,500. 650, we're going to say. Now, the total amount we paid was more than that because we purchased like 5 of these and some other items that we'll add. The vendor I'm going to say is Office Depot, and then we have the asset account that it's going to go to. Now, this is where we're going to apply it to the computer account, the equipment account. We're not going to sell it, so nothing's going to go into this item. Asset description, we can have a more full description. We might want to add more detail to the computer, Dell computer here. The location is in the office, we're going to say. PO number, if it's applicable. Serial number, if there's a serial number on the computer, then again, we'd want to put that there. We want to differentiate these computers, even if they're all the same, so that, again, we know which one we're basically selling. We're tracking them as we go. Warranty expires. If there's an expiration of the warranty, any more detail they can provide is more differentiation about these computers we can put down below. So then I'm going to say OK, and I spelled something wrong. So it's going to say, hey, do you want to spell it right? And I'm going to say, yeah. And so there we have it. And then if we go back to the checking account, now I can choose that item. I can choose the item, which is the computer. So there it is. We have one of those items. Now again, I'm not going to try to say it's multiple of those items. Even though I bought multiple computers, I'm going to add the other 4 of them one at a time. So you can also, instead of adding it to the list up top, I can add it down here. So I'm going to note that before I add the next one, you might be in a situation where the expense had already been recorded and you're trying to build basically your fixed asset list. If you had recorded this item just to an expense, then you can still go to your lists over here, the fixed asset list, and add the fixed assets, even though you didn't list out the fixed assets when you input the data, and you can still list out your fixed assets in accordance with basically a depreciation schedule you might get from your tax preparer, for example. So if you've already had transactions that went to the expense account, that's not, it's not the end of the world. You could still put together a supporting list for it that will support it. So I'm gonna go back on over. So now we're gonna record this one, and I'm gonna say I want a new item. So I'm gonna say this is a fixed asset item. And then I'm going to call this a Dell computer. Now, on the list name, you might want to have like the last 4 digits of like the serial number or something that will differentiate it basically on your list, so you can see it differentiated on the list possibly. And then I'm going to say this is new again. And the purchase description, maybe you want a fuller description. So maybe it's something like this for the fuller description, asset description here. This one also purchased 01/15/21, I believe we decided on. The cost is going to be $650 again. Vendor is going to be Dell. Vendor, I think we said Office Depot or Dell. We probably should be put. And then I'm going to say the drop down here. This is going to go into the equipment. Not sold yet. Location is the office. And then serial number, you'd want the serial number because that's going to differentiate the 2 computers. So you can actually track the 2 computers and where they are located. And obviously, they might change. You might take it from the office to some other place and whatnot. And you can kind of know where the computer is as you go. So I'm going to say OK on that one. And I'm going to ignore this because I'm going to ignore that and ignore that. and ignore that, and ignore that, ignore. Okay, so there we have that. And then let's do another one. So I'm going to say we have a new item again, and notice they're all the same. You're going to say, well, they're all the same, but they're not. They're different computers, and we might sell them later at different times or dispose of them at different times. So we want to have them listed out basically differently. So this is going to be another Dell computer, and we're going to say that this one was purchased new, and I'll say this has got the same kind of description or specs here, and the asset is once again going to go to the equipment account. And then the date is going to be on the 15th. We're going to say 01/15/21, cost 650, vendor Home Depot. And so we're going to say, or I think I said Office Depot. It was Office Depot, location, office. And then again, you would want the serial number that would distinguish them. You might want the last 4 digits of the number here to distinguish them right on the front of your report. I'm going to ignore all, ignore all, ignore all, ignore all. Okay. So then let's do it again. So I've got 1, 2, 3. So I'm going to do 2 more of these. I'm going to say another item. And this is going to be fixed asset. This is going to be a Dell computer. And there's the description. There's the description here. Here. This is on 01/15/21/650. And I'll leave that for now. This is going to be equipment. And so there we have it. Serial number. We would want that there. And we'd want maybe last 4 digits or so of the number there. And I'm going to ignore all, ignore all, ignore all, ignore all. And then let's do it again one more time for this one. Then we'll add a different one. And then we'll say fixed assets. And this is a Dell computer. Something like that. Purchase description, more detail. I'll put it down here as well. Detailed description here. 01/15/21, cost 650. Equipment is the account. And serial number we would want here. And then the office location. Let's say office. And okay. And ignore all, ignore all, ignore all, ignore all. All right, so that brings us to the 650. And then now if I go to my lists to the left-hand side, you can see now we have all these things stacking up in the list. So I'm going to go back to my check, and now we have some monitors that we purchased. Let's say with this is going to be a Livono monitor. I'm going to say we add another one. This is going to be a fixed asset part, and we're going to say that this one, we'll say it's a Livono monitor, and it's going to be purchase description here. This was on 01/15/20 as well, same purchase, and this is going to be, let's say, for the 380. This is going to be the vendor is Office Depot, and the asset is going to be equipment here. And so there we have it, and I'm going to put that in the notes. Location, office, serial number. Again, we might want to have the last 4 digits of the serial number here as well. So I'm going to say okay, ignore all, and that was for 380. We're going to say the same one here. I'm going to say we have another one, a Livono, add new. This is going to be a fixed asset part. This is a Livono monitor. And there's the description here, date 01/15/21, cost 380. And then I'll say it's an hold on a second, cancel. Equipment, so equipment, and then location, office, serial number, we might want part of the serial number up top here as well. So I'm going to say okay, ignore all, and then it'll do it one more time for the monitor. Add another monitor, fixed asset. We have then the Lenovo monitor, and that's going to be it. It's going to be 380. It's going to be for the date 01/15/20. Last 4 digits of the serial. Location is in the office. Serial number. And then the account, equipment, machinery and equipment. And so that's good. Let's save that. Ignore all, and there we have it. And then we're going to say we got an office printer, so I'm going to call it another fixed asset, one more. I'm going to say this is a new one, and this is going to be a fixed asset, and I'm going to call this an Xerox VersaLink printer. I'll call it, and then we're going to say this is going to be for, that's the description, date 01/15/20, cost, we're going to say 2310 for that, and I'll put this is in the equipment, machinery and equipment, and then we might want the last 4 of the number here, and this is going to be location, office, and serial number we would want here as well. So then I'm going to say OK, and ignore all, and so there we have that. So notice we got the multiple pieces of equipment adding up to the 6,700 down below. This now should tie out to the fixed asset list. Now, we made the list basically as we go. Again, if you were to just record this check, like if you just wrote a check and you're like, they entered the check and they just put it to the fixed assets and they didn't break it out, they just put it to fixed assets. Well, you could still basically, you can either adjust the check or you can go to your list over here and break it out by the list. Because what you really need is this list to provide to the tax preparer at the end of the year so they can list it out one by one so that when you sell these items, you actually have an idea of which one you sold. So then if I was to record this, let's go ahead and say save and close, and it's gonna say this transaction, that's okay. Do I have the right date? Let's do it 2021 is what I want on the date, 2021. And then save and close, and yes. And then if I go to my reports drop down company and financial, and we'll take a look at the balance sheet standard, and I change the date, let's change the range from 01/01/21 to 12/31/21, and okay. So now we've got our amount that's in our machinery and equipment. If I double click on it, then it gives us that activity. And notice it gives us that activity nicely here as well in our activity report. So if I was to provide basically just this to my tax preparer, instead of having just one line item that says, office equipment from Office Depot for 6,700, which they would then be forced to put on their schedule as just one line item of 6,700 office equipment, and then possibly list out, well, that include 5 computers or whatever, and 3 monitors and 1 large printer. Instead of them doing that, they can put it in one by one, which is what you should do, so that then if there could be differentiation in the kind of depreciation on the equipment, so that it might be depreciated differently. But even if it was depreciated the same, the second problem that will inevitably be run into if you put them all in one lump sum is you're going to dispose of or sell items of these items along the way. And if they're all in there in one group lump sum on the depreciation schedule like this, and you have just one line item and you sell like 1/5 of it, one small piece of it, and it's not even broken out, as even units like we did here, we had multiple different things at different prices we sold, then you're going to try to figure out the accumulated depreciation related to it that you sold, and it's just going to be a mess. I mean, it's just like a mess. So what you want to do is not do that. You want to break out, if you purchase multiple things that all have to be on the books as a depreciable asset, as their own individual asset. And again, it takes a lot, you saw that takes a lot more time to do. It takes a lot more time to do it on the depreciation schedule as well. But when you sell things, it makes it way easier to do as well. So now we have this kind of broken out schedule. If I double click on any of these items, then I can see the transaction that took place. The transaction that took place is obviously just the purchase. It's an easy check to write. The reason we had to do the items over here is simply to break that more detail out. So if I close this out, notice that even if you just wrote the check, for example, and you didn't use the items, but you wrote the check for $6,700 and just put it into the expense line item here. In other words, if you just double clicked on this and you just recorded here on the expense side, $6,700 in equipment, closing this back out, you could still have created the supporting schedule for it by going over to your fixed assets schedule over here and then generating these fixed assets. It just wouldn't have been generated directly from the data input. You could do them basically separate to support what had already been recorded. So if someone had already recorded an expense, you could go in there and change the actual recording to reflect this, or you can do this separately. If you do this separately, you still have the data that you need because you could run then this report to provide to your tax preparer at the end of the year so that they can enter this information with the detail on it. Also note that this should line up now. It's sorted by account. It should line up to what is on the balance sheet over here. Now notice they don't give us a nice report that kind of sums it up by category for us, but you can do it by exporting it to Excel and then summing it up if you want. But what you really need is what the new items were that was purchased or sold in the time period. So for example, you could go to a report down below and say that we want to go to the reports, and then I want to take a look at the fixed asset listing. So here's our list, and then I might export this to Excel. I might say, all right, create an Excel worksheet with that so I can do some quick calculations with it if I so choose. So I'm going to take it to to a new workbook. I'm just going to open up the new workbook. And if I was to provide this to the tax preparer, if you want to make this as easy as possible on them, I would then add up each of the categories. So here's the new activity for this category, and then you could basically sum this up and say, well, this sums up, to this 6,007, and give that data. That then should tie out to what's on the balance sheet. If you go over to the balance sheet, that's 6,007. If it doesn't tie out in total, it might be because of the prior activity due to the prior year. It should at least tie out to the activity. So if I double click on the current year, the things that were purchased or sold in the current year, you want to basically have your list tie out to the current activity, meaning these are the purchases that happened in the current year, and then provide a list of the disposals or sales that happened in the current year.